Welcome to Investors Insights. Our topic this week is Market Moving Week. It's a big week. I was amazed at all the data and discussion that took place. So Bobby, start off and explain why it's such a big week and how it can affect portfolios because of earnings here.
Yeah, big earnings week. 126 S&P 500 companies reported earnings, including three of the biggest stocks in the world, Apple, Microsoft, and Amazon.
Yes.
And then the good news is a fifth of the S&P 500 companies have already reported, and it's been pretty good. So we've had earnings growth of 10.9%, with revenues rising 6.1% year over year. So far, so good. And then also good news is 88% of technology companies have reported better than expected earnings. That's good because
that's been excellent.
That's a sector that got really hit at the end of the year.
Yeah, very much so. But now let's try to keep the hands steady here because earnings are sounding good. But then Trey, our Chairman Powell, no relation by the way, is going to be talking this week.
That's
possibly.
right. On Wednesday, the Fed will announce their decision. No one expects them to do anything on interest rates. What we saw last year, the Fed doesn't really have to do anything to impact the markets. Even in a non-Fed meeting last October, Jerome Powell's statements led to one of the biggest drops in the history of the stock market. So Bobby, we're looking for great earnings.
Why are we laughing?
I know, yeah. We'll have to keep from crying sometimes. But we could have a great week of earnings, and it could be all for naught if Jerome Powell decides to misspeak. We think it's going to be a very dovish or very laid-back Fed meeting. I imagine he may have hopefully learned his lesson last quarter.
We hope so, yes, each and every day.
We don't expect the rates to go up. The focus will be on the balance sheet, because the Fed now has two tools. One is interest rate policy. The other one is a $4 trillion balance sheet of bonds that they may or may not reduce at a certain pace. And the thing is, there's no history of this. We've never had a $4 trillion balance sheet, so it's hard to say what's good and what's bad. So we're in a new era of Fed policy.
Yeah, well, and let's talk about history. One of my favorite quotes is by Will Rogers that history doesn't repeat itself, but it sure does rhyme. And actually, I think you talked from a historical standpoint as well about the job report.
Did we've got that research, as Bobby mentioned, come out Friday. But what's interesting about that? For years, we've struggled with people, and particularly after 2008, that were underemployed or just discouraged in the job market. A lot of people would go back to school. Some just would quit and handle it in another way. But really, for the first time since 1996, 23 years, that number has dropped.
The underemployed.
The underemployed. In the Clinton administration was the last time we actually had that drop. That's a long time for that number for underemployed to increase or people discouraged. But that just goes to show you how deep and wide this job recovery has been. When you can reverse a number that's been out there for a quarter of a century, you're doing something.
Right.
So that's another great sign.
That's something that the Fed has mentioned often that has really kind of bothered them because typically their policies impact the employment rate, and that underemployed just has consistently risen, and it's kind of something really kind of in their crawl that they couldn't figure out how
to work with.
How to get that down. They reduce rates to zero. They bought assets, but that number just kept going up.
Right. Well, and as you said, there hasn't been a historical precedent on a lot of the things that are being experienced.
No, that's right.
And on that note, Adam, one of them, we made history in terms of government shutdown.
Yep.
And there's still concern about that out there. Talk about it.
Yeah, as of last Friday, the government shutdown has ended temporarily.
Right.
So, that was 35 days, longest in U.S. history, like you said. While that ended, there's still uncertainty there. And the markets tend not to like uncertainty. So it's going to be important these next 3 weeks to see if any negotiations come out of this.
Right.
There still could be some volatility in the markets during this time. Yeah. But on a good note, the GDP each week it was closed was affected GDP growth by this shutdown. So now that we have this coming back, hopefully GDP growth will be coming back up.
Okay, so what I'm hearing here, and I want to summarize for our viewers, we're looking at earnings being very strong, a Fed that may not be raising rates, people are going back to work and unemployment is continuing to be down. And if they can work through the government shutdown or the impact on that has not been as tremendous as some thought at this point. Is that right?
That's absolutely
Everybody,
right.
Yeah. Yep. So on that note, we want you to have a great week. We want you to know there's a lot of news coming at you and that we do this vlog so we can take that kind of news and relate it to why it involves you, your portfolios, and things that you can keep up with. Also, thank you for sharing this vlog with others. You have our permission to do so, and we really appreciate that, and continue to keep those emails and phone calls coming. We look forward to keeping you updated as the week progresses. Have a great week.